Hello, and you're welcome to Global Business Insights, where we go a little deeper into the business headlines from all over the world. South Africa's ruling African National Congress party agreed a power sharing deal with the market friendly Democratic Alliance as a new government emerges under the leadership of the ANC's Cyril Ramaphosa. We got some macroeconomic data early in the day. A quarterly Bank of England survey published today showed that in the UK, forecast of the rate of price growth in the next 12 months for May was 2.8%, down from 3% in February. And in the US, consumer confidence weakened in early June with the University of Michigan's Consumer Sentiment Index coming in lower to 65.6 from 69.1 in May. The reading was also below market expectation of 72 and the lowest level since November, as Americans become increasingly concerned over inflation and weakening incomes. Also, the release showed that current conditions index declined to 62.5 from 69.6 in the previous month. Also, earlier today, G7 members agreed a $50 billion loan package for Ukraine to be funded by profits from seized Russian assets. And the Bank of Japan board members, after a two-day monetary policy review meeting, have decided to maintain the key interest rate at 0%. Europe's auto industry has warned of exposure to retaliation from China after imposing as much as 38.1% tariffs on Chinese electric vehicles. Tesla investors have given the nod to CEO Elon Musk's humongous $56 billion compensation package and moving the company's state of incorporation to Texas, confirming confidence in his leadership. NNPC Limited, Nigeria's state oil company, has withdrawn its case to support an ExxonMobil corporation's sale of its oil and gas assets in Nigeria to SEPLAT Energy PLC, paving the way for conclusion of the deal. Markets will be heaving a sigh of relief as South Africa's ruling ANC signs a power sharing agreement with the Democratic Alliance, seen as a pro-market party. This is as a new government under the leadership of ANC Cyril Ramaphosa emerges. More importantly, the deal excludes Julius Malema's economic freedom fighters and Jacob Zuma's Umkhonto weSizwe, that's MK party, both perceived as radical populist parties that favor nationalization of key industry players. The deal that was signed includes 9 high-level priorities for fixing South Africa's ailing economy, which has struggled to grow economically, and includes achieving rapid, inclusive, and sustainable economic growth. Investors believe a deal with pro-market DA would ensure stable policy and potentially accelerate economic growth. The rand strengthened after news of the deal, and according to Helen Zille, the DA chair who signed the deal with the ANC Secretary General Fikile Mbalula, said this gives South Africa a chance of creating a stable democracy and an inclusive economy. Many would say things could have gone much worse, and the checks and balances with the Democratic Alliance as a coalition partner will most likely help. Europe did its best this week not to be as hard as the US in slamming high tariffs on Chinese EVs, a move that European car makers are warning will attract retaliation from China. China accounts for about a third of unit sales of European vehicle giants, and though under 1 in 5 of the company's cars sold there is imported from Germany, these are the high margin top-end models. As China raises tariffs and finds ways to curb European car imports, European manufacturers targeting Chinese markets may move into China, hoping that in-country production will be better received. Also, if China EVs are made more expensive in US and Europe, China will target Asia, Latin America, and Africa more aggressively, requiring these regions to be alert to dumping and even perhaps protect their economies. Higher cost of EVs worldwide as a result will also reduce the demand for EVs and slow the clean energy transition. I suspect there could be opportunities as the world seeks alternatives to China, making Vietnam, India, and Africa potential spots as they position themselves with incentives for players. Africa needs to take advantage of the situation by advancing policies that compel manufacturers who want to sell in its market to set up plants in the continent as it de-risks the environment. Tepid growth in Europe has become a bigger political issue as opposition parties blame leaders. It is still unclear if the political transition in France and Germany will result in an alignment with the US in its anti-China positioning or a more populist situation where the new parties of the new government are motivated more by economic considerations. It could be that many of these tariffs may be relaxed, especially as China toughens on the retaliation front. A lot will also depend on what happens in the White House in November. However that plays out, a Cold War with China is set to get colder. Like Germany and Britain before World War I, China and the United States seem to be tied together in a downward tango which may end in disaster for both countries and for the world at large. Similar to the situation a century ago where we saw economic competition, geopolitical fears, and deep mistrust fueling an antagonism that led to wider global conflict. Businesses, I expect, should be positioning with more caution given how all this is evolving. Ghana has presented a new debt restructuring proposal to international bondholders as they seek to rework $13 billion of euro bonds, definitely too burdensome for them to service. The fiscal stress and challenge of high foreign debts as interest rates in the US stay higher for longer are issues for African economies like Ghana. The more prudent will be boldly and radically plugging leakages linked to weak control processes, fueling corruption, and slashing cost of governance to create the vastly diminished fiscal space to invest in people and vital infrastructure. But that may still not be enough. Renegotiation to reduce costs of servicing bonds, as we see in Ghana, is inevitable as debt service becomes way too high, leaving very little to run the country, talk less of investing. Foreign creditors expect payment, prodded by sharp financial advisors motivated by high fees, milking environments where poverty is increasing. Ghana is definitely not the only African economy in the basket of debt-shackled countries hoping to escape debt captivity, as analysts see many trapped in an unsustainable debt scenario. And in Nigeria, the national oil company NNPC Limited has withdrawn its legal challenge to ExxonMobil sale of its oil and gas assets to SEPLAT Energy. Industry leaders have been pointing out the poor handling of the divestment of IUCs to local players, which has led to extended periods of no investment and blocks left fallow. The present industry structure, with many outdated agreements and constructs struck decades ago, is holding back progress. New executive orders have tried to improve the environment for operators, but a more fundamental rethink that can position the nation to attract investment into the entire value chain is required, and not just in the upstream sector, where investment from production of late has taken a plunge as inefficient and suboptimal structures and processes continue to make things difficult. South African Johannesburg Stock Exchange must have welcomed the news of an alliance between the ANC and the investor-friendly Democratic Alliance. The JSE, that's Johannesburg Stock Exchange All-Share Index, closed up 0.88%. In Europe, politics having a different impact as French stocks continue to plunge as the CAC 40 index heads for its worst week in more than 2 years. This was as risk premium associated with a potential far-right victory in the upcoming parliamentary elections weighed on sentiment. If you look at the major European indices, they are all looking on the back foot. Stoxx Europe 50 down 0.69%, Stoxx Europe 600 down 0.97%, FTSE 100 down 0.21%. The German DAX down 1.44%. CAC 40, that's the French index, closed down 2.66%. It's looking like a decline of as much as 6% for the CAC 40 this week. In the US, indexes fell as consumer sentiment data showed a drop in the appetite of consumers to purchase. The S&P 500 pulled back from record highs, so did the Nasdaq, as we got that consumer sentiment index data that was disappointing. Nasdaq down 0.09%, Dow 30 down 0.26%, S&P 500 also down 0.21%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Thank you very much for watching and enjoy your weekend. Bye-bye.